Hello, everyone. Welcome to the market update for Monday. It's Monday. It threw me off a little bit that I moved it to Monday and Wednesday for this week and next week, but Monday, December the 21st. Well, we start off lower at the open. The Dow was down about 400 points or right around there, and then we've rebounded since then. So it shows that the market is still wanting to go higher. We'll see if that continues. Actually, that's a good thing that we had a little bit of that shock, that sell-off early. We had been kind of stagnant, and a move like that kind of shakes things up a little bit. It also attracts, as we could see today, it attracted a lot of the buy the dip crowd. As soon as they saw a dip, they were buying into it or trying to buy into it. And so that's we'll see if that continues. Now we haven't had much of a dip to alleviate a little bit of the overbought condition, but we have moved sideways for quite a while. So that's brought things back a little bit. But let's take a look at the alerts here, the direction alerts here. If we come down, now these will update overnight. And so right now the momentum indicator it's not extreme. It's in the buy range there though, indicating a bullish trend. The breadth indicator though is getting into that extreme range. We pointed that out last week as well. That was starting to get into that extreme range there. We'll keep an eye on that. Now, just because one of these indicators gets in the extreme range doesn't mean that the market has to pull back. If all of them start to get into that extreme range, then we know we're probably due for a little bit of a bigger pullback. But I don't see anything screaming sell just yet. Sentiment, we're in the complacency range, but again, not in the extreme range. We are moving this direction though, so if the market starts rallying this week, we'll see if that ends up moving us into that extreme range. By the way, the week of Christmas tends to be a little bit more of a bullish week. Not always, though, and so you don't just assume that, these next 2 weeks tend to be more bullish, but you don't just assume that that's going to be the case. One thing that could be a headwind for the market going into the end of the year is if traders are worried about taxes going up, they may sell stocks they've had big gains on to try to get taxed in this year's rate. That way, in case rates are increased next year, they don't pay higher taxes. But that I don't know that that's going to be. It hasn't seemed to be huge. Usually, you would see more of that starting around now, more of the selling, actually probably earlier than now. And we haven't seen a lot of that selling going on. So, but we'll keep an eye on that. The other thing to be aware of this week is that the market it's going to be a short trading week. The market's going to be closed on Friday for Christmas. And another important bit of information is that on Christmas Eve, so on Thursday, there's only a half day of trading. So the markets will be closing at 1 p.m. Eastern time. So whatever that is in your time zone, be aware of that. That's really important for people that trade options. I've had to kind of warn people about this, that if they expect that there's going to be a full day of trading, and especially with nowadays, they have the weekly options that expire every Friday. If you think, and because the market's closed on Friday, they are actually going to expire on Thursday. And then on top of that, if you think that there's a full trading day on Thursday, and you're thinking you're going to sell your options at the end of the market, and the market ends 3 hours earlier, then that can be a problem. So it's important to be aware of those dates this time of year. And it's very rare that the market is closed. It's very rare that the market has these days of trading, but that we get both of those this week. Now, next week, I believe that New Year's Eve is a full trading day, but the markets are closed on New Year's next week, so they will They close on Friday again. All right, let's take a look at the buy-sell ratios here. We're still seeing the gap pretty wide. It has come down. The buys have come down a little bit to alleviate that extreme overbought condition, but we're still pretty wide here. So, definitely things could pull back a little bit, but we've been that way. We've been in this extreme range for a few weeks now, and so it can stay up here for a little while, and maybe even through the end of the year. So, like I said, there's a few things that we're seeing that are indicating overbought, but nothing, not a bunch of things that are screaming overbought and that we're really close to a pullback. And so now that could be a little bit dangerous on a day like today. If the Dow would have stayed down 400 points, there really wasn't much of a warning of something that big ahead of time. I like to see these indicators give me a warning that a pullback of 1% or more is being is at least there's a little bit of a warning there that could take place, so that I can lighten up on some of the positions I'm in, or not get into not increase the size of my positions or anything like that. I can start taking more defensive measures. The sentiment indicator here is off the extreme. Again, we look for it if it gets up into this area right here is when we've got a market that's probably due for a pullback, and we're still a ways away from there. So there's still room that the market could run. We'll see if it can rally off of the early pullback here. By the way, and we talked about this when we were talking about candlesticks. If we take a look at, let's take a look at the SPY here. Switch it over to candlesticks. So right now, the S&P 500 is down. It's showing it's down about 1/4%. Okay, and if that's all you saw at the end of the day, you might think, oh man, today was a very bearish day or a terrible day. Especially with the early headlines that the Dow was down even more, down percentage-wise even more, and it rebounded. It had the biggest. It's actually positive right now. But again, if you know how to read the price action and read that candle right there, you can see that that's actually a bullish reversal candle. We opened lower, we opened down here, and if we close where we're at right now, we'll actually close higher than where we opened, although still lower than the day before. And anytime you close higher than where you open, but still lower than the day before, that's considered a bullish reversal. The fact that's taking place at a support area right here, there's resistance here, support there. I think that's a pretty good bullish sign that we could rally up from this. Now, if we break all this, turn around and break all that support, that would be bearish. So we'll keep an eye on that this week as well. And by the way, this right here is the S&P did not trade all the way up here today. That was sometimes you'll get this on a chart. It's what we call a bad tick, meaning that there was probably an order that went through that ended up getting canceled because it was maybe typed in wrong or something like that. But it shows up still on the chart. Usually it takes a few days or so for that to go away. Now that can, how do you say, well, how can I know if I see a move like that, how can I know if it's real or if it's, kind of a false move? Usually it'll be extreme. Like in this case right here, that's a real extreme move right there. And especially when it happens on the market ETFs, if I know that the market wasn't up that much today, then I know that couldn't have been a valid trade that went through. And plus, you would see it on the other ETFs as well. And if you can sometimes know that this might happen on individual stock too if you check other stocks within the sector. But mostly it'll be just outrageously, that tail is outrageously long, and Now, if an individual stock has some breaking news that came out that might have significantly increased the volatility in the stock, it's possible it could have a big move like that. But usually you'll see it happen, though. You'll see it have moved up that far, and then it'll drop back down. This shows up, though, without any sort of movement. It just kind of shows up out of nowhere, where it went up this far and down this far in a matter of seconds or something like that. And that's just not usually going to be the case. The only other way I'd see it happening is on a very small company that just has very few shares outstanding, and maybe it becomes everyone dives in it for one reason or another. This happened actually on a stock it was actually a few days ago. It was I think it was Airbnb or something like that. The ticker symbol for Airbnb is AN or A. Let's see, A. Anyway, the bottom line is that it hadn't started trading yet, but there was a ticker symbol out there that was like ARB, I think it was, or something like that. And everyone thought that was Airbnb, and they started trading it, thinking it was trading. It was the IPO, and it was some small company from I can't remember where, but it causes just huge volatility in the stock that wasn't planned for or expected, and sometimes it could create these type of extreme moves because of that. All right, sorry, I didn't mean to get sidetracked on that. Let's take a look at the Dow. You can see the Dow has rebounded all the way back up. So the Dow is still up. It's still higher than where it opened. It opened all the way down here, but it's actually higher than where it closed on Friday. So it's positive right now. That's a pretty big comeback. But again, you remember when I was talking about candlesticks? I can't remember if it was last week or the week before. They are measuring momentum, and so if you know how to read that momentum, you can, again, it's a huge advantage if you're able to do that. And so today was a huge momentum swing. We were down, and we were down big at the open, and then we've roared all the way back. And again, if all you're looking at are the percentage, you can say, oh, the Dow's up, but it's barely up. It's not even up 0.25%, Well, yeah, but it's basically up over 400 points from where it opened, basically. That's a huge reversal. And so being able to read that type of momentum swing is very important as a trader. And with the sideways kind of movement that we've had, I think that's one of those moves. The opening down here could be one of those things that catapults us out of that sideways range. We'll see if it does, but we keep an eye on that this week as well. Let's continue to go down the list. The QQQ, again, similar to the S&P, open lower, but it's trading higher than where it opened. It's still kind of held this trend line here. If I can draw a somewhat straight line. Actually, that's not too bad for free drawing. So it looks to be kind of rebounding off of that trend line. And that's a good sign if it starts to break that. You've also got some horizontal support resistance here. So if we were to break down below that 300 level, that would be very bearish. But I don't see that right now. I don't see that happening, especially with that bullish reversal today. And then the Russell 2000, which has been outperforming the other indexes. Same thing, it's down a little bit today, but still has that bullish reversal. Bonds are still caught in the downtrend. Until we can break that, we're still assuming that they're heading lower. We've got lower highs and lower lows. Actually, we had an even low right here, but we had a lower low before then, and we failed off of that even low. We failed to go to a higher high, so it looks like things are going to work their way back down to here. We'll see if that gets broken and goes lower, but the trend is just clearly down right now, and until we see signals of that reversing, we're going to assume that trend downward is going to continue. All right, gold. Gold is starting to look like it could be breaking the downtrend a little bit. So right here we had a lower high. Obviously, we had a lower low down into here, or into here. But then since then, you have a higher low right here, and we've broken out to a higher high right here. It's starting to show signs. Now you'd want it to get above this high to go to kind of break that larger downtrend, because that was the last. Or this was actually it broke above. This was a lower high right here. It broke above that. So actually it broke that. So there was a lower high right there, lower low. And it broke that. It broke to a higher high right here, and you've got a higher low. So it looks like gold could finally be transitioning back into an uptrend. We're still kind of in the early stages. What you'd want to see on this little pullback right here is if that holds and it starts to go higher again, and now you've got another higher low and another higher high. Obviously, the more higher lows, higher highs you get, the more it's confirming the uptrend. There's a possible trend reversal there. So it looks like gold could be transitioning into that uptrend. We'll keep an eye on that this week as well. See if that continues. Oil's been in a strong uptrend. Had a drop today, but then it looks like it's going to close higher than where it opened. So it kind of is looking like a bullish reversal. It's weird to think that the oil stocks have outperformed almost everything else recently. But and I've mentioned this a number of times. I'm still a little skeptical of the oil rally, but it's definitely, the trend is there. So you can't ignore that. It's actually trending higher, and it looked like it might have broken that a little bit. It was getting pretty overbought, but that drop today might have alleviated that a little bit. We'll see if that trend continues, or if it breaks down further. But again, with a bullish reversal like that, it's looking like at the very least it could try to rally back up to those highs again off of that bullish reversal day today. The dollar still in the downtrend, and we're still seeing lower highs, lower lows. We're going to assume there's lower high, lower low. This lower low right here, it tried to rally up a little bit, although today is a bearish reversal where it opened stronger. It looks like it's going to close lower than where it opened, although still higher than the day before. That's kind of a bearish reversal there. We're assuming that downtrend is going to continue until we see it break, until we see it change. And then the VIX spiked up early today off that market opening lower, but so it's now trading lower than where it opened. So we'll see if this can come down a little bit further. That was a pretty good spike. So the market was a little bit freaked out. And part of what it's freaked out about, as you might have seen the headlines today, is that everyone's kind of watching that new strain of COVID that's coming out of Great Britain. We don't know much about it yet, so and that's what freaks the market out. If the uncertainty, anything that is going to cause uncertainty is going to cause the market to freak out a little bit. Now, this time last year was when we first were hearing the news of COVID coming out of China. And remember, the markets didn't worry about it. Nobody really worried about it. It was just, it was kind of out there. And then it wasn't until we got into, February, late January, February, that people started to freak out a little bit. And then really the markets freaked out about it. I think it was in March when it really started selling off. So I think it's something you definitely have to pay attention to. We'll see how much the market is really paying attention to it, because the market reacted to it by opening lower. But as you can see, the buyers shook it off. They just bought right in and pushed the market right back up again. So the traders are basically saying it's not a big deal to them right now with the way they're aggressively coming and buying. So we'll see if that trend continues, or if the market starts selling off and we start seeing the VIX really start spiking back up again, then we have to worry that that it could be something bigger. Maybe it could cause other shutdown or something like that. Or maybe it makes the current vaccine obsolete or something like that. That's what I think is worrying everybody, is that, you know, this thing's mutating already. And if we have to come up with we have to change the vaccine when we just finally got it out there, I think that would really cause the markets to freak out again. And that could be something that could freak the markets out like it did back in March, where we have a massive sell-off again. So we're hoping that doesn't happen. All right. All right. So that takes us through the charts here of the market, different markets. Let's look at individual stocks, and then we'll get into the training. By the way, the training today, for those that want to stick around for it, we're going to build a little bit on what we talked about in the last training. The last training was on ABC patterns, and there's a specific trade that you can use on ABC patterns. That's a really basic. You know when to get in, you know when to get out, you know when to stop out. It's a very short-term type trade. It's called the 382 to 618 trade. It involves using the Fibonacci retracement tool as well. And so I'll show you how you can do it and where you can find your trades for that particular trade. And so for those of you who want to stick around for it, if you don't want to stick around for it, this is being recorded, so you can go review it later. But I'll cover that as soon as we get done with the main market update here. All right. Let's go into our sectors here, and let's go under computer and technology, into the holds. We talked about Zoom video before, so I'm not gonna. I still like that one. I'm not gonna talk about that one today. I want to go down to this next one right here, CMBM. It's a 97 strength rank. And hopefully what jumps out at you is you can see the very distinct uptrend. And you can see that this thing is holding this trend line right here. If you draw a straight line, this won't be perfectly straight, but you draw a trend line out there. Every time the stock is pulled back, it's pulled back to that trend line. And it's gone to a hold signal, pulling back. Has a 97 strength rank, so not the 98, but close enough. I mean, this is why we want to look at some of these charts, because even though it doesn't fit that 98 strength rank, yeah, I mean, this is a beautiful uptrending stock right here. You know, you can even draw a trend line on the tops right here, and it pretty closely goes through the tops. Okay. All right. So what we're looking for here off of that is we're waiting for it to go back from hold to buy. And we're probably pretty close for that, doing that. So you know, you're just waiting for that confirmation. If we look up here, you can see that we're pretty close to going back to that buy signal. All right, let's go back to the computer technology. I want to go one below that and take a look at INOD. Again, 97 strength rank. Now this one's gone back to a buy signal already. Had a big update today. There was a hold signal. It had barely gone to a hold for the last 2 days, trading days right there. But again, I like the pullback. Strong uptrend right now. This is a $5 stock. This thing has the potential to really start taking off here. It had a consolidation through here, and now it's starting to, the rocket ship is starting to take off here. So let's take a look at the volume too behind the move. Now I do need to make a note about volume. This week, you're going to start to see volume numbers really start to shrink. With most traders taking Christmas and New Year's off, and the way it's set up for a very long weekend, basically a 4-day weekend, if you're taking those 2 days off, you're going to see a dramatic drop in volume starting tomorrow, because some people are going to take the whole week off because it's just this time of year. I mean, and a lot of people will take the week after, between Christmas and New Year's off. Many of you are probably off that week too. That you're excited because you're going to be able to stay at home and trade. But the professionals, many of the professionals aren't going to be trading, or at least trading very heavily. And so you're going to see volume numbers dip quite a bit, which means that, I always like to look at volume on a move, and I like to see on a move like this, where it's coming off of a pullback, I want to see it happen on higher than average volume, which it looks like, we've got another hour and a half before the market closes, and we've already hit the volume from Friday, and it's definitely higher than where it's been. You see, so what happens here is we pull back right here, but we pull back on lighter volume. We had a heavy volume here on this little burst, then it pulled back on lighter volume, and now we're starting to see increased volume again. So that confirms that this thing should start to move higher. But the problem with this week is you might not get that. It may not show higher than average volume because, again, it could be decent volume for the day on a holiday week, but not not that huge volume confirmation that you'd normally like to look for. So you almost have to throw volume analysis out on a week like this if you're going to be getting into some trades, because you may not get it. But look at all these moves where it took off on very high volume. Right here was a day where it took off very high volume. The volume bars coming all the way up. Now, we're not going to see that type of volume today, but that shows you, though, that they're still buying the stock, and it's like I said, it's starting to go parabolic there. So that's a pretty good chart right there. So I like that one. And then one more here. Let's go into the retail sector. Now, this is one that I've already talked about. Big Five. We've gone over a few times because I've liked the pattern there. It's a 94 strength rank. BGFV is a ticker symbol right here. Big Five Sporting Goods, $10 stock. But it went to a buy signal today. So I like the kind of that stair step pattern here. Here was a nice move up, step, nice move up, step, nice move up, step. Higher highs, higher lows. Acting like an uptrend. Recent pullback right here, and now it's gone back to a buy signal right there. So I just wanted to point that out because I happen to see that. And that's what we've been waiting for. Now, we have been watching this thing back when it was right in here. It did dip a little bit further than from where we were watching it. And again, we're waiting for that confirmation. Then it's gone back up, and then it went to that buy signal today. So for those that have been watching that, and if that's what your trade management technique is to enter the trade, well, there it's flashing that buy signal today. All right, that's all I have for the market update portion of the class. I want to get into the training now. And the training, what we're going to talk about today is a specific trade using ABC patterns, and it's called the 382 to 618 trade. Now, those of you that remember the training on the Fibonacci Retracement Tool, you know that the 382 to 618 is the retracement zone that stocks will tend to retrace at least 38.2% of their trend, but you don't, but not more than 61.8%. But if it retraces more than 61.8%, it could be in a trend reversal. So if you're not familiar with that trading, you might want to go back. I think that one was back. I couldn't remember if it was last week or the week before, but we talked about retracements. You can go back and review that class to learn about that. And you probably want to review the ABC patterns class, which was the last class we did on last Thursday. But we're kind of combining the two. Now we're going to be using the retracement tool a little bit different though in this. In the retracement class and in the ABC class, we were measuring the retracement of the trend. Now the ABC pattern is a correction or a step within the trend. And so we were measuring how far this ABC pattern right here was retracing this trend, this trend from this low right here, from the end of the last correction to the highest point where it started to pull back. How far was it retracing that move right there? And again, you know, we said it could retrace anywhere from 38.2% or 382 to the lower part of the zone, the 618. And remember, in that class, I said 50% is the main concept of the retracement. Stocks will tend to retrace about 50% of their moves. And this just gives us a little bit of a zone or an area that we expect that retracement to take place. Okay. Now, the specific trade we're going to go over today is going to be different. We're not measuring the retracement of the trend. We're going to find an ABC pattern, and we can use that scan in the reversal app, which we'll use here in just a second. I can look for that ABC pattern. And what I want to do is I want to measure the retracement within the ABC pattern, meaning I'm going to use my selection tool. I'm going to start it at the beginning of that ABC pattern till what I think is what looks like the end of that ABC pattern. So I'm going to highlight basically just the ABC pattern. I'm going to take my selection tool. I'm going to highlight that ABC pattern. I'm going to put my retracement tool on the screen. And remember, the retracement tool, all it does is it looks for the highest point that it sees on the screen and the lowest point it sees on the screen. So what it's going to do is it's going to grab this highest point and this lowest point right here, and the line's going to show the line drawing right here. And then what I'm looking at is the retracement of the ABC pattern. I'm going to look for that 382, and it'll show the 50%, and it'll show the 618. So what does the 50% represent here? It represent that's a 50% retracement of the ABC pattern, of that distance from the beginning of the ABC pattern to the end of the ABC pattern. That's the halfway point. If the stock were to move up to that point, it would be halfway between that move down. Does that make sense? It is confusing. I know I've been teaching this a long time, and every time I start teaching this trade, if you're not real comfortable or familiar with the whole retracement zone, and you're already measuring the retracement of the trend, you finally got that down, and then I'm flipping it upside down here in a way where we're now measuring the retracement of the ABC pattern. But I tell you, it will get easier, and once you get this down, it'll make sense. And I'm going to walk you through it. We're going to look at a live example. I'll walk you through it step by step. And so it's just a matter of repetition after that. You go through the recording a few times and until it kind of clicks for you. And it will click eventually. But what we're going to do here is we're not going to worry about the 50% retracement on this one. On that retracement tool, it's not only going to show me where that 382 retracement is, but it's going to give me the dollar amount of where that is. So it's going to say that 382 retracement is at $4, let's say. And it's going to tell me where that 618 retracement is. Let's say that is at $6. What I'm going to do is I'm going to enter the trade at the 382 retracement of that ABC pattern. Now, remember, what makes this trade work is that you should already be in a trend, an uptrend here in this case. And you're coming out of a correction. That's what that ABC pattern is. It's a correction within that uptrend. What we're doing then is we're getting a little bit of confirmation before we're getting in. So we're letting that stock establish that it's moving higher again, because it could just keep dropping, but it's starting to move higher again, and we're going to get in at that 382 retracement level. And you say, well, why not just stay in the trade? You could use that as just an entry technique and then just use a trailing stop and let this go. But this is a specific trade. It is meant to be. It's meant to take advantage of probabilities. It's a very short trade. We're going to get in at the 382. We're going to get out at the 618 retracement, and it's going to tell me. So in this case, I'm going to get in at $4 because that's what the 382 retracement was at. It's at $4. I'm going to get out at $6. So I should make $2 profit. Now, the way I use this trade is that for my stop loss is because I'm looking to make $2 if I'm right. I got to make sure that hopefully I'm only going to lose $2 if I'm wrong. Obviously, the markets could make bigger moves or gaps that beyond these points, and that you'll deal with it. Sometimes it'll gap up beyond that point. You'll make more than what you were planning on, and that'll be good. Sometimes it'll gap down below your stop loss point. You'll lose a little bit more. That'll happen. That's just the variation of trading. So I want to take for my stop loss. I'm going to take that $2 and subtract it from my entry. If I'm going to get in at $4 right here, I'm going to say, okay, minus $2 right here. My stop is going to be down here at $2. Now, most of the time, that stop is going to be at or below the end of that ABC pattern. If you want to use the low of that ABC pattern right there as your stop, your reward to risk may be a little bit off. It might not be exactly 1-to-1, but it'll probably be close enough. Again, I'll show you the live example of this. I'm just kind of getting the concept down, then we'll look at the live example, and hopefully this will click a little bit better. Now, why is it important that I have that 1-to-1 reward to risk? I'm going to make $2 if I'm right. I'm going to lose $2 if I'm wrong. It's because this specific trade, when you do it this specific way, getting into the 382 out the 618, stopping out at that same distance below your entry, has about a 70 to 80% success rate. Has about a 70 to 80% probability. I got to make sure I say that right. Success rate, there's too many variables to talk about success rate, but what that probability, what that means is that if you have an ABC pattern, that's key, you have an ABC pattern, and you get to a 382 retracement of that ABC pattern, there's a 70 to 80% probability that you're going to get to the 618 retracement of that ABC pattern. Now let's assume that for a second that means winning percentage or success rate or something like that. In this case right here, we're going to make $2 if we're right. We're going to lose $2 if we're wrong. Now let's say we had 10 trades set up exactly like this one, where we're going to make $2 if we're right. We're going to lose $2 if we're wrong. Well, let's say that we had that this means winning percentage. I'm not saying it does, but let's say that means winning percentage. That means that out of those 10 trades, we should have 7 winners and 3 losers. On the 7 winners, we make $2, assuming that all 10 trades are exactly the same, which they wouldn't be, but you understand the concept here, though. On those 7 trades, we make $2 or $14. Now, we're going to have losing trades. We always expect to have losing trades. We're going to, in this case, we would have 3 losing trades where we lose $2 or $6. So we made $14 on the trades that worked. We lost $6 on the trades that didn't work. Overall, we ended up with an $8 profit. Okay, that's what we're trying to accomplish. Now, again, it's not that exact. Obviously, in real life application, you could have 6 of these lose in a row and have 15 of them gain in a row. You know, the averages will average out over time, and that's what you always have to remember. Is that you know, I've seen people start this trade and they started a losing streak. They have 7 losers in a row, and then they say it doesn't work. Well, that's like flipping heads and tails. Could you flip heads 7 times in a row? Yeah, it's possible. Does that mean that that's going to continue? No. In fact, if you've ever done this exercise before, you could flip a coin, and I tested it one time when I was really bored. I must have flipped the coin 500 times, and it's 50-50. It averages out, and you have these streaks in between. It's a great exercise, though. I always encourage people to do that sometime, just to see how, because it really shows you how trading works. You know, so many times people focus on just a specific month or a specific week, and they base a system off of their success or failure within a small sample size, within a few trades. And sometimes it's because they had only so much to invest, and they put too much into each trade, and they happen to get in during a down market, and they were buying stocks or something like that. But over time, you'll end up with these probabilities and these percentages. And so, but that's what makes this trade kind of exciting, is that it's real simple, and it has a very high probability of success. Now, I would emphasize that you know, especially since this is more of a bullish strategy, you know, use the indicators of your system. If you're in a bear market and the market is stair-stepping down, and you're getting bearish signals throughout the whole system, that, you know, we've gone through all the analysis today in the market update. If all those clues are showing that we're in a downtrend, then don't do a bullish strategy. I don't care what the probability is or the percentages are. Don't do a bullish strategy in a down market, because that's when you're most likely to have those 7 or 8 losing trades in a row or something like that, is when you're going against the trend direction. And you want to make sure that the individual stock you're using this on is in an uptrend. Okay. All right. So let's go look at a couple examples, and we'll apply this. First of all, we have to switch things over to the reversal app, which you do right here. You click on that button. Now remember, if you switch into the reversal app, you have to switch back out of it to get back to the normal trend following platform. And you'll know you're in the reversal app because this is going to turn blue when I click on it. So now I'm in the reversal app. So if I come under muscle stocks right here and I want to find the normal muscle stocks that I use, and I don't see them, I see these different names right here, you're in the reversal app. If I go to the watch list and none of my watch lists are there, it's because you're in the reversal app. You have to switch it back. Click on that button again, it'll switch it back. Now we're going to go under the power plays right here. This is one of the good scans to find ABC patterns. And I'm going to use the ABC patterns that we went over last Thursday, just so we can, you know, just kind of build on what we kind of talked about last week. And the first one was JD right here. Now I like to use just the candlestick version when I'm doing this. Now, you can see the stock has been in an uptrend. You had this nice move up right here. Had this little ABC pattern as it pulled back right up to this right here, and this looks like the ABC pattern right here. Now, again, last week we measured how far this ABC pattern had retraced this move up. So when we were doing the retracement class, we put the retracement tool on the screen, and we started at the end of the last correction right here. I want to take that low to this high, see how far that pullback has retraced that move. So I needed to highlight this whole area right here. And we were right at that 618 retracement level. And that's where it gapped down today. So it gapped down today right to it. But again, it has that bullish reversal today. It looks like it's going to close higher than where it opened, although still down from the day before. Okay, that was the normal retracement, looking at how far it was retracing the trend. That's not what we're doing here, though. In this case, what we're doing, let's reset the zone here, is we want to see how far, we want to measure the retracement of the ABC pattern. So I want to basically highlight that ABC pattern right here. And when I put the retracement tool on, it's going to grab the top of that ABC pattern down to the bottom of it, although it's probably grabbed this low right here because that's a little bit lower, but that's all right. It'll be close enough. And it's going to show me 382. Right here would be about 50%. That'd be about half that distance from down here to up here. And then the 618. So you can do this one of two ways. You can put your retracement tool on the screen and then highlight just that ABC pattern right there. Or you could zoom it, you could highlight the ABC pattern and then put the retracement tool on the screen. Either way, it doesn't matter. I'm going to go ahead and just highlight the ABC pattern. And then I'm going to put the retracement tool on the screen here. Oops. I didn't like that. Let's try putting the retracement tool on the screen first. And then let's select the ABC pattern here. There we go. All right, so it zoomed in now to that. And you can see, so now this is showing how far we retraced the ABC pattern. And it gives you the dollar amount. So right here, I'm going to be entering the trade at $83.80. So I know exactly when to get in. Now, as far as how do you set up a trade, you could on your broker site, and Jesse goes through this a little bit more detail. If you have access to the training videos, the Learning Center, he goes into a little bit more in depth on using your broker site. You could set up a OCO order, OTO orders, but you can set it up to where your order will trigger to buy the stock at this price. When the stock gets to $83.80, it'll buy the stock. And so you can kind of automate this a little bit to where you don't have to just sit there and watch it, because it could be a short period of time where it gets to that, goes from here to here. You could do something like that to kind of automate a little bit. By the way, chances are you're not always going to get in exactly at that price. Sometimes it could gap up a little bit higher than that or something like that. Again, there's little variables within this whole trade that you'll just have to deal with, and they will work their way out over time. Meaning that sometimes those gaps will work in your favor, sometimes will work against you, but it tends to even out over time. So I know exactly where I'm going to get in. I know exactly where I'm going to get out. I'm going to get out right here at 618 at $87.22. So once I get in the trade, I could put an order in to say I want to get out when the stock gets to $87.22, and it'll automatically get me out. Now, where's my stop? Well, first of all, I gotta calculate the difference between the 382 to the 618. So I'm going to take $87.22 minus $83.80. And you get $3.42. So to find my stop, I'm going to take the entry of $83.80, and I'm going to subtract $3.42, and I'm going to get $80.38. Now, that's probably right in this area right here. If you want, you could put your stop below this low right here. It would be a little bit more risk, though, if you do that. But that's the support area right there. So like the stock came back, it started to move up right here. It almost got to our entry point, and then it came back down. Let's say it did get to our entry point, and it came all the way back down to the support area right here, and then it rebounded again. Well, we would have been stopped out if we used $80.38, but we would have had that one-to-one reward to risk. So that's a variation. Again, you can decide on there. You might want to put your stop just below that low, but that means you're going to lose a little bit more when you're wrong than you make when you're right. Now, with the 70 to 80% probability, you still should make more money than you lose over time based on the averages. But that's why you have to kind of make that decision on whether you want to increase that risk a little bit there. So again, we're going to make $3.42 if we're right. Theoretically, we should lose $3.42 if we're wrong. Now, again, assume that you had a 70% winning percentage, although that's not what it says. It's a 70% probability. There's a 70% probability that if you get to the 382 retracement of an ABC pattern, that you'll get to the 618 retracement of the ABC pattern. But I like to do it this way just so you see the numbers game that's involved with trading and why reward to risk is so important. We'll have a class on reward to risk later on when we get into trade management. I'm going to write these out here, and then we'll. All right, so assuming we had 10 trades exactly like this, and they wouldn't be exact, but assuming we did, on our 7 winning trades, we're going to make $3.42 or $23.94. On our 3 losing trades, we're going to lose $3.42 on each of those, or $10.26. Sorry, it's hard to write with the drawing tool here. So if we take our gains of $23.94, subtract out our losses of $10.26, we should end up with a net profit overall out of those 10 trades. We should be up $13.68, theoretically. You know, a lot of times when we learn how to trade, we always want to focus on the winners, and it'd be great if all we did was make, $24, not lose anything. That's not how it works. I mean, it'd be like running a business and having only revenue but no expenses, right? What business has all revenue and no expenses? Nothing. You're going to have expenses, and expenses in trading are your losing trades. Here's our net profit overall. And that's pretty darn good on a trade that's real simple. All right, let's see. We got time for one more example. Let's do one more. Let's reset this. And let's look at BLL. That was the other one down here, Ball Corp. And again, it doesn't have to be a crystal clear textbook ABC. This is more of a clear ABC right here. But this looks like it's kind of moving a little choppy, more sideways here. And so I'm going to, and I'm not quite certain yet that that's the low that's going to move off that low. And that's the nice thing about this trade too is, if this thing does move lower, then I'm not going to get that confirmation again in the trade. It's got to get to that 382 area there. And another thing that's important to understand too is that, a lot of people will get tempted. They'll get into the 382 and then we'll get to the 618. They get greedy and they say, oh, well, it should get back up to here. Well, remember that 70 to 80% probability is not that you're getting into the 382 and it's going to go up here. Okay, it's only for this small distance in here. And I've seen stocks that get to the 382, they go right to the 618, and right when they get to the 618, they fall apart and they drop, and that ends up not even being an ABC pattern. But yet that still worked. That trade still worked because there was that, there's that probability if it gets that 382 retracement, they'll get to the 618 off of that pullback or correction. But it's really important that you wait for it to get to the 382. That's your confirmation that you could be starting the uptrend. Well, it's very important that you have an uptrend to begin with, that you're getting a pullback within that uptrend, and that you wait for that confirmation, wait for it to get to that 382 retracement of the pullback and get out the 618, and then your stop is the same distance below there from the entry point. All right, so let's put our retracement tool on the screen, and let's take our selection tool. We're going to highlight the ABC pattern. So starting, we're going to highlight this right here. Make sure it gets all the way to the end. Sometimes it stops a little bit short. There we go. And if for some reason it stopped a little bit short, you can push it. You can push the slide bar all the way to the right, and it'll make sure it gets all the data in there. So let me show you what I mean, because this happens a lot. It'd be good for me to show you. So let's say you're highlighting something. And it stops right here. See, I'm not all the way to the right side, right? It's not taking into account today's move. And I let go. I say, oh, it's not taking into account today's move. I can come down here to the slide bar and just left click on it and then slide it and then push it all the way to the right. And it'll get you there. All right. So on this one, I'm going to get in at $94.95. That's at the 382 right here. I'm going to get out at $97.94. The difference is 97.94 minus 94.95 is $2.99. or roughly $3. And I'm going to make it easy. I'm going to just take $3 off of our entry price. So 94.95 minus $3 is $91.95. So we're going to lose $3 if we're wrong. We're going to make $3 if we're right. So our stop's down here at 91.95. There again, if you wanted to push it below that low right there, you could, but it'd be a little bit more of a loss if you're wrong. But you have the benefit of the support area right there that it might hold. Now again, you say, well, Jerry, how do we know this thing's going to go up right here? I don't. If this thing could turn around tomorrow and drop lower or fall apart, and I never got the confirmation to get in, so I never got in the trade. And you're going to have that happen. There's going to be a lot of these that don't end up getting to your entry point. Less likely though if you follow the steps of looking for an uptrend and all that kind of stuff. So I know my trade. I could put a limit order to get in at $94.95. It hits that, it get me in very close to that price. I could then place a limit order to get out. Once I get in the trade, I could place a limit order to get out at $97.94. I could put a stop order in at $91.95. You could actually get in the trade and you can set up what's called an OCO order, or one cancels the other order, where you could set up your exit at 97.94 and your stop at 91.95. And if the stock were to go up and hit your exit target, you'd get out of that trade, and it would, as it executed that order, or as it triggered that order, it automatically cancel your stop. That's why it's called a one cancels the other order. Or if it dropped down and stopped you out, once it triggered your stop, it would automatically cancel your sell order up here to get out. So that's the trade. I mean, it's like I said, it's pretty simple. By the way, if you know what, it's a good variation of this is you can either use the reversal app to look for those ABC patterns. You could also go in on and do your sector analysis. You're looking for stocks with a 98 strength rank that maybe have pulled back. Zoom Video is one that had pulled back. And you could do, you could measure the retracement of this move down right here, get in at the 382, get out the 618. And so you've got a stock that's not only in an uptrend, but it's a high strength rank too. You're dealing with stronger companies. You could use that tool as well. All right. Sorry, I went a little bit over time today, but hopefully that helps a little bit. And like I said, if it's really kind of confusing to you, first of all, you might not have been through the retracement class or the ABC patterns class. You might want to go through those. And I covered those, I believe, last week, Tuesday and Thursday. I might have done I can't remember which is which now, but and review those trainings, and it'll make a lot more sense when you have that background. And then just repetition. Go through this recording a few times, try it a few times, do a few paper trades first on this before you do real money. And, you don't want to be screwing up and trying to figure things out with real money. It's an expensive way to learn. So, you can do a few of these with virtual trading and then start doing the real trades with it. All right, thanks, everyone. Have a great week. We'll see you Wednesday, not Thursday, Wednesday, for the stock-specific class, and go from there. Bye, everyone.